Good afternoon, it's Quant Trade Edge with the daily wrap-up for Wednesday, April 20th, 2022. Top on our list yesterday was the Australian dollar. We had this inside bar pattern, and if this were to break above this high, we were looking for the Forex trade. And again, part of the reason we were looking for that was we saw the 240-minute divergences form down near the bottom. Between this low and this low, we had 1, 2, 3 higher lows in RSI with, these couple of lower lows in price. And then, and I want to bring your attention to my Twitter account here, that if you are not already subscribed, it's something I would following. I would recommend you do it because I post some things here in real time. And yesterday, I believe I posted there we go. This was the Australian dollar. There were two charts. One is this divergence that I just showed you. And then the way to enter it is this 5-minute U-turn at 73.75. And, we're currently about, 75, 80 pips higher than that level right now. So the Forex trade now will wait for us to break that high of day, which in this case is the outside day of the inside pattern. And that happened right here. And when that happened, there was no immediate two-legged pullback, but there finally was one from this peak at 1245. We had an A, B, C, and if you really get down to the nitty-gritty, you'll see that this C was half a tick higher than this A leg down. And I typically don't like that, but I was so bullish on this pattern that I went ahead and used it. And this got 4R up in here. Up to this peak, it's a little closer to 5.5 or 6R, so not bad for one day's work on the Australian. The other thing we were looking at yesterday on that gas, was twofold. One was being a 5 SMA trade. Having had 13 closes above the 5 SMA, the first test below, you expect to test back up, and what I typically shoot for on that is this pocket. I call it the final pocket of the pattern, and we got that overnight. And then the thing to look at after that is, we know how strong 695 was. That was what we used yesterday to trade long against, and we know the significance of that. So if 695 were to break, we know there would be follow through. So, after spiking up there at 7:15 in the morning, we started pushing down and we started spending time here. And for me, depending on the size you're trying to put on, you might need to get on ahead of time. But for me, I would much rather wait till we actually break the level to get on, because then you could have more certainty in the trade. And from that 695 that we broke, we got down to 679. So we got a good 16 cents from that level, 15 or 16 cents. And then it became very obvious on, if we put the LBR 310, as we were getting down to those lows, we had a very clean 3 pushes pattern here. In fact, if we put the Keltners on, going back to, I'll put a link to the 3 pushes video here, but this is a very useful pattern. But you can see that first push into the Keltner made momentum down here. That second push into the Keltner made a much higher momentum. And that third push into the Keltner made an even higher momentum. And typically from that 3 pushes, you're going to get 2 legs up. So in this situation where we were already short for that break of support, this was a good exit from the short. If you wanted to take it long, the only thing, quote unquote, that you're owed is 2 legs up. So there's one, there's one, there's one. And that would have been your sign that, if that were to go, to protect yourself here. So, and also through that whole thing, previous day low was a good target. So if you were inclined to flip here, not just get out of the short, but to also get long. And again, inflection point, 10:55 in the morning. Well, I guess the actual low was 10:40 in the morning, right after European close, and got two legs up to the upside in nat gas. Going back to something else I posted this morning on Twitter was a volatility contraction pattern in the NASDAQ. And, oops, I'm sorry, that's an equity. Here we go. So we'd broken this 15-minute downtrend, and we had this little contraction pattern, and this was all pre-open. So if we were to go and look at that pre-open, $12.30, that all happened sorry, it's the 19th, 20th. Oh, I'm sorry, this is a 15-minute. Let me drop it to a 5-minute. There we go. This is what we were looking at. Against yesterday's high, we went up and, had a cup and handle, and this tight congestion area met our ATR criteria of being below 0.70. Here we were, here we were 0.79, but down here earlier in the pattern, we're down to 56.79. So this breakout was really good, and it happened very quickly. It happened in 1, 2, 3 bars, and it all happened ahead of the open. This was done by 7 a.m. So that was one clue, because typically on the open is when they're trying to shake things out. But what made this extremely clear as a reason to get out and even short was our favorite anti-climax pattern. We got one right at the top on the 5-minute, and it was also there on the 15-minute. So as you know, on the 5-minute, on any anti-climax pattern, I like to go for 2 times the size of the bar. And you'll see we got that target very handily. This bar was about 49 points in length. And I'm sorry. This being the anti-climax bar, you use the next red bar as your entry. So your risk bar is this red one right here, and you can see that the stop would have held using that as a risk bar, and you even got chances to short really close to it if you wanted to really go for high multiples. And then, this happened on the open, but yeah, pretty soon after the open, I believe around 49 was 2R. We ended up getting way more than that because there was a flush off the open there. And if you did it off the 15-minute chart, then you had a slightly bigger risk bar, but that also achieved its target. That risk bar would have been here. And probably by around here you already had 2R, but ended up getting a lot more out of it. Other than that, crude oil was interesting today. It had a very similar structure to natural gas, where you had this kind of inverse head and shoulders where this support level had held. This was 101.69. Down here we got down to 101.51. And today was inventory numbers, EIA. So let me clean up this stuff here. I don't need it. This bar right here was the EIA bar. EIA is inventory numbers that get released once a week. Now, if you notice, the low of the day, the low from yesterday was 101.51, and just ahead of that, we got to 101.52. And, that's no coincidence. Somebody was there protecting that previous day's low ahead of the EIA release, and then we had the release, and popped up and then soon failed. And if you can kind of look at this upside down, think of this as a cup, and then this little piece here as a handle. It's almost like a vol compression pattern in reverse. So again, for me, I like to just wait for the full confirmation. So stop below, take $1, walk away. And the fact that this pattern is now failing and coming back up here is setting up bullish for tomorrow. And the same thing in natural gas. Well, natural gas, it hasn't gotten back above 695, but if we do, that would probably set up more bullishly. So let's look at what's setting up for tomorrow. Let's get to our homework page and see what we have. There we go. Oh, by the way, this is just Costco. A beautiful pattern. I've been posting this for a while on Twitter. Had our breakout, little retest coming back. Crude oil. We had 2 PF3s down. Price is not yet flipped up, but I would be inclined to do a 4X above this high. This high is significant. We have 104.07 there, 103.96. Maybe I'd wait for it to get over 104.07. But given this failed 120-minute downside pattern, I would be inclined to do a 4X trade there. Natural gas. Don't see anything great here. Probably just wait and watch on that. Gold. Now, I really like what's setting up here. We've had 1 PF3 down, a price flip up, and then this is the exact kind of bar above which we want to do a 4X trade. So, this was an extended run. We got one close below. We'd be looking for at least another close above, but more so based on the Taylor, the ROC flipping up and the characteristics of this bar, I'd be inclined to do a 4X there. Same thing in silver, and what's even better in silver, well, it would be nice for it to close a little stronger so that this can flip up, and also for this to turn green. But we still have our P1, and typically from a P1 you get 2 legs up. So that's our first leg, and if we take out this high, we would be starting our second leg. So I would look for a 4X trade on that. Copper, too sloppy. Euro, yeah, we're all inside this area. Australian, we've already had our trade today. Let's see. Yeah, we've already had 2 days up in the ROC, so no play there. S&P, we've already had 2 days up. So I guess the best trades for tomorrow are going to be gold and silver and crude oil. Those would be the 4X trades I'd be looking for. Anyway, if you like this content, please drop a like and subscribe. I'll go ahead and link the Anti-Climax Pattern so you can see from the reference today in the NASDAQ earlier. And I'll also link in the 3 pushes pattern so you can see what we're talking about with natural gas off its bottom today, just like it had a pattern yesterday, the same pattern. So anyway, have a good day. And also, just as an aside, I posted a video on Netflix today, given the crazy action in that stock. And I was really just pointing out that if you stick to the rules, stick to the structure, you'll find your points to risk against, and more often than not come out ahead than catching a knife too early and getting severely hurt. So anyway, have a good evening.